Just as I promised to bring you Forex signals every weekends, today we are here for another signal. My name is Kofi, your admin for Leading Forex YouTube channel. We began this playlist not quite long, and our mission is to provide you Forex signals that you can trade when the week begins. When a new trading week opens. So today we are going to look at another Forex signal. But before that, last week we gave a signal and something happened. We will be going there any moment from now to see that signal and see what we can learn from that signal as Forex traders. So if you agree with me, we will quickly do a review of last week's signal. And then from there, we move on to this week's signal. We have two main playlists on this YouTube channel. If you want to be a Forex trader, or if you are already a trader, but you want to at least refresh your memory in terms of the knowledge that you have in Forex, we have a playlist known as Forex Training for Beginners. That is one of the playlists you can find on this channel. Go to that playlist, watch the part 1 to currently, I think, part 42. Yes, that is where we are currently. Watch all those videos, and I'm sure, even if you are not a Forex trader, you will become a good Forex trader and trade on your own as a result of those videos that you will watch. Aside that, we also have a playlist, which is Forex Signals, and that is where you are watching this video, okay? So if you want weekly signals, we give you signals every weekends on this channel. So you can stay here and get signals from us every weekend so that when the market opens, you can use those signals on your MT4 or your broker or your account or whatsoever you may call it. So quickly, let's go to last week's signal and see what happened and what we can learn from that signal. So quickly, let me share the MT4 with you. This is our MT4. And last week, we gave a signal on Euro USD. Euro USD, and we said we should buy Euro USD. Now something happened, and what happened is what I want to share with you. Now last week we gave a signal with a price, okay? So let me switch. This is on daily time frame. Let me switch to the 4-hour time frame. Now if I go to the 4-hour time frame, last week the market closed somewhere here. Quickly, let me show you where the market closed. The market was sitting here last week. The price closed here last weekend. And then we suggested that when the market opens, we should buy Euro USD because we were going to see a continuation. Do you all remember that? Good. Now, when the market opened, it didn't open at that price. It opened at a different price, which was here. This is on the 4-hour time frame. So the market closed here on Friday. And then on Sunday night, which is in Ghana, but I don't know what time it will be in your country. In Ghana, it is Sunday night, 10 p.m. So the market opened down here. Instead of opening in somewhere here, it dropped down and opened around this place. And so when you watch, you see that there's still a gap in between these two candles. Do you see that gap? Good. So in the Forex market, when the market behaves this way, we call that slippage. Now, slippage, the spelling of slippage is S-L-I-P-P-A-G-E. So slip and then page. So when you add the two, you get slippage. So quickly, maybe let me type the word there, slippage. Let me type it, slippage. Okay, so this is slippage. All right. So when you have, come on, bring, yes, slippage. So when you see a gap like what happened here, when the market opened, we call that slippage. So we're going to explain what slippage simply means, okay? So that once you see that another time, you will know what we are talking about. Are we good? Now, when we say slippage, slippage simply means that the market opens at a different price, which is either higher from the previous day's price or lower from the previous day's price. Okay? When the market opens either higher or lower from the previous day's price, leaving a gap in between the previous day's price and then the current price. When you see that gap in between those candles or those prices, we call that slippage. Now, what brings about slippage in the forex market? There are few things that bring about slippage. I may not be able to talk about all of them. I'll just talk about two. All right? I'll just talk about two. Now, slippage could happen as a result of news, and I will explain. And slippage could also happen as a result of some pending orders. So let me take it from the pending orders, then I will end it at the news. Now, every day we have transactions going on in the forex market. So this one happened on Friday. So let me use the Friday as an example, okay? Now, on Fridays, we all know that it is the last day for the forex market to close. All right? So if Friday is the last day for the forex market to close, what happens? On that Friday, assuming there are a lot of institutions or governments that is trying to do some exchanges. I mean, maybe, for instance, a typical example, maybe Ghana want to buy from China. And so we need to convert our monies, which is the Ghana cedi, into the US dollar. So we order, the government of Ghana orders for US dollar, okay? And then because it is on Friday, the time is caught up, okay? The processing of the exchange, everything is done. But in the process of delivering the order to Ghana, in terms of whatever Ghana is buying, in the process of giving Ghana the dollars, time wasn't on the side of the market. And so the order couldn't go through. Although all processes have been done, but just that the final delivery isn't able to go through. So such an order by Ghana to buy some US dollars in order to make some purchases from China hangs along the line. The final delivery or process couldn't go through. So that order becomes a pending order. Assuming the same thing happens with maybe United States trying to buy some crude oil from maybe Saudi Arabia or Russia or maybe Canada, and then the process of getting the money across, the process of exchange is not able to go through as a result of time. So the market closes while the order is still pending. So at that point, we can say that such orders are pending orders. And we all know that those orders are big or huge orders. And so these orders are hanging in the forex market on Friday, and then the market closes. Now, what is going to happen is that on Monday or on Sunday night, which is in Ghana here, when the market opens, those orders that are pending orders from the previous week becomes a priority. Those orders are made to go through automatically, immediately the market opens. Do you get it? So all pending orders on Friday, which got caught up by time, and so the market closed, and those orders couldn't go through. When the market opens for the next week or the following week, those orders that were pending on Friday becomes a priority. They will be the first orders to go through in the market. So when those orders are about to go through, if those orders are huge, they can cause what is called slippage, because the price at which the market closed on Friday could change as a result of huge transactions taking place immediately when the market opens. So we can see sometimes a slippage as a result of those huge orders, which were pending orders from the previous week. Is that okay? It can also happen in the course of the week. Maybe on Tuesdays, those orders couldn't go through. So those orders becomes pending orders, are waiting for Wednesday. Now, Wednesday, when the market opens, those orders are moved to take place or execute on Wednesday. And sometimes you can see a slippage as a result of that. But oftentimes we see it during weekends when there are a huge pile of orders that couldn't go through on Friday. And for that matter, they're supposed to go through when the market opens. Once the market opens, you may see a slippage, which is the gap which you saw right now. That is the first one. Number two, other things that can cause slippage, I said, has to do with news. When there is any breaking news that happens within the weekends, when the market is closed, or when there is any major news that takes effect or that takes place during weekends when the market is closed, you will know that as forex traders, the news is also a motivator to how the market reacts. And so we do have what we call fundamental analysis. And those who do fundamental analysis will tell you that they look at the news and data that is about to be released. And once the news or the data is released, the market reacts to those news or data. Okay. So when the market reacts to those data, you will see wild movement in the market. For instance, those who trade NFP, which is the non-formal payroll or the non-farm payroll in the United States, they will tell you that when it is time for NFP, everybody is on guard, because when the news is released, the market will go wild. Those who also trade interest rate decisions will tell you that when there is interest rate decision, the market will go wild. Those who trade the CPI, the core CPI, will tell you that when a country releases its core CPI, the market will react to that news. This and many other news are things the market will want to react to. So when there is similar news over the weekends, and at that moment, the market is closed, the market is not able to react to that news because the market is closed. So what will happen is that when the market opens, whatever would have happened if the market was in session will happen when the market opens. And that is what will normally give us a gap. You will see a huge gap. The gap you will see is to tell you that this is where the price would have gotten to if the market was opened as a result of this news. But because the market was closed at that point, the market didn't get the opportunity to react to the news. And that is why immediately the market opened, we saw that gap, which is called slippage. Is that okay? So this is slippage. There are other factors, but time will not permit us to discuss all because we are giving you a signal. But we just wanted to explain this so that when you see similar things happening, you would actually understand what has happened. So what happened last weekend was as a result of Russia-Ukraine conflict or disturbance. The market didn't get opportunity to react to whatever was happening over the weekends. So when the market opened, we saw a slippage, which was as a result of things that were happening in Russia-Ukraine, which the market didn't get the opportunity to react. It is now giving you the gap to show you that this is what the market would have done if the market was in session. Is that okay? So the slippage we saw on Euro USD, which is here. If I'm to show you the cursor well, I just want to draw, which is here. You see the big gap in between when the price closed and then when the market opened. So the price closed last week Friday at this price here. And then the market opened at this price over here, which is the downline here. So you can see the difference. Look at where the market closed here on weekends. And this is where the market opened when the market opened. This is where the price came to at once, giving us a huge gap in between these two prices. So this is what we call slippage. Now, the question is, so we said that we should buy around this area when the market opens, but the market didn't open at that price. So what do we do? Now, let me explain that because I got a few of you asking me that question in my inbox. So I need to explain that to you. Now, listen carefully. If the market opens, let's say we are buying, okay? In this case, Euro USD, we gave a buy. So let's say we gave a buy at 1. Buy at 1, and then the market opened at -1, which is below the 1. It is only an advantage to you because we are buying, and then the price went back down in our favor for us to buy. So it means the price is giving us better opportunity to buy. Do you get it? We were supposed to buy at 1. And then when the market opened, the price reduced to maybe -1 or 0.05. It means that the price has given us a better opportunity to buy. We want to buy from this level, okay? Look at my hand on top, the one on top. We want to buy from this level upwards. And then, or let's use my nose. We wanted to buy from this level from my nose here up to this part, or from my nose here to my hair. We wanted to buy from my nose to my hair. And then when the market opened, it didn't open on my nose so that we could buy. It rather opened on my beard. So opening here is still giving us a better advantage for us to do what? To buy. Opening below here gives us a better advantage to buy. We wanted to buy here, but when the market opened, it opened here. So it's still giving us a better opportunity to buy. Do you get it? Good. Now, assuming we wanted to buy from my nose, and then the market opened at my eyes, this will be a disadvantage because already the market has climbed up above the area we wanted to buy. Wanted to buy here. And then when the market opened, it opened up here around my eyes. So this will become a disadvantage to us to continue buying. It means the price is already gone because it is now around my eyes going up. So it will be a disadvantage to us. So what we may have to do is that if the price opened around my eyes, we may have to wait and see if the price will drop back and come to my nose area. Once the price comes back from my eyes level here back to my nose area, then it will become a better opportunity for us to do what? To buy. But if the market opens straightforward from my eye area here, you may have to wait because the price is already gone. Gone in our favor, gone the direction where we wanted to go. So we may have to wait and see if it will come back to the level that we were looking for. Then we can now buy. But if we want to buy here and then it drops and come to my nose, my mouth or my beard area here, it's a better opportunity for us to buy. Now, the opposite is also true. Assuming we wanted to sell from my nose area here downwards to my beard, and then when the market opened, instead of it opening at my nose level here, it opened at my mouth level here. So it means price has already moved down towards our direction. And so it will be a disadvantage for us to continue selling to my beard level. What we have to do is to wait around my mouth level here and see if price will pull back to my nose level. Once it does that, then we can now sell. Do you get it? The same way, if we wanted to sell from my nose level and then the price opened and then it opened around my eye level, it is in a better position for us to sell because we wanted it here and then price even went back a bit more for us. So which is a better advantage for us to sell. I'm sure this explanation will be a bit clear. And this will apply to all signals that I will give you. Once I give you a signal, you have to check the entry price. So the entry price is my nose. And if we are buying, once you see someone posting a signal, find out the entry price. If the entry price is around here, and then the person is saying buy, and price is already gone up to somewhere my eyes level here, it will be a disadvantage for you to buy. So you may have to let that signal go. But if the person said buy at my nose area, and then the time you saw the trade was going down and it was around my mouth area, it means you are still in a better position to buy. Or the time you saw the trade was around my beard for a buy, it means it's still in a better position. You are in a better position to buy. Do you get the understanding? So whenever you see a signal, you're supposed to check the entry price of that signal and ask yourself, at this point that I'm seeing this signal, is it in my advantage or disadvantage? And once it is in your disadvantage, you let it go. You allow the trade to go. You get a better opportunity. Don't rush to enter. But if it is in your favor, if it is in your advantage, then you can go in and take that signal whenever you see it. So in our case, if I should take you back to our case here with regards to Euro USD, we all said that we should buy Euro USD at this level when the market opens. And then when the market opened, it opened around here downwards. So which was still our advantage to buy. So if you bought here when the market opened, let's find out whether we got our 100 pips, because 100 pips simply is what we are using with these signals. 100 pips TP, 100 pips stop loss. So let's see. The trade went up before finally coming back sell. So let's find out whether we won this trade or we lost. It is very, very important. You see, the trade opened here. Let me do it well because I'm taking my time. The trade opened here, went up to this level here, and then made its way back down. So let's find out between this level to this level, did we win? Or did we get our 100 pips before the trade started coming back down, or we didn't get? So if we got, it means we won it. If we didn't, it means we lost. So let's see. Entry prices here now, up to this level is about 111 pips. 111 pips. And what was our TP? Our TP was just 100 pips. So if you bought this trade, it means we won. We won before the trade came back against us and went all the way down. So whoever bought this trade had a TP of 100 pips hit because the trade went 111 pips. It went up 111 pips before coming back down. So this was a win trade. for our signals. Is that okay? Now, if this was a win trade, and per my explanation, you have understood it well, then it means our signals on this channel so far so good. It means we have lost one and we have won how many? 4. Is that not it? Or we've won one and we've lost one on 1-5. I may have to check, but I think it's 4-1 as it stands, or 4-5. I'll check that. I'll check. No, I think it's 4-5. Yes, 4-5. Yes, it is 1:5 now. The signals are 6 so far. So we lost 1 and then we won 5. Is that okay? So this week, what is going to be our signal? If we've lost just 1 and we won 5, what is going to be our signal for this week? Let's go straight to our signal for this week. Our signal for this week is going to be AUDCAD. AUDCAD. That is going to be our signal for this week. Now, are we going to buy AUDCAD or we are going to sell AUDCAD? This is where we all need to pay attention. So pay attention to this. Are we selling or buying AUDCAD? So let's go straight to the MT4 and then we do the analysis. So AUDCAD, we have AUDCAD here. Good, this is AUDCAD. First of all, AUDCAD, let me go to the daily time frame of AUDCAD and then let's see what it is now. This is the daily time frame or weekly time frame. Let me see. Okay, this is the weekly time frame of AUDCAD. Now, the weekly time frame of AUDCAD says that as it stands now, it's in a sell mode. Sell mode. All right. Just that as we speak, it went all the way up and then has made its way back down. And currently, as we speak, AUDCAD is gradually making its way up. Because for how many weeks? 1, 2, 3, 4, 5 weeks. AUDCAD has been on a buy on the weekly time frame. And AUDCAD is around a very, very strong resistance level as we speak now. Now, if you look at it, we have a resistance level here. We have another one here. And then we have another one here. And that is the level at which AUDCAD is hovering around currently. So if this is true, then we are of the view that based on this resistance that we are seeing here, we believe that AUDCAD will make a pullback. AUDCAD will do what? Will make a pullback. Let me do everything right. So we have a resistance level here. Okay, good. And AUDCAD is currently within that resistance level. So we are of the view that AUDCAD will make a pullback down. And then if the need be to continue its way up, then it will continue its way up. But we are surely going to see a pullback. So based on this analysis here, when we go to the daily time frame, we will see similar. You see it? Yes. This is the similar thing. AUDCAD, as we speak right now, is hovering around here, which is a resistance level. So being around this resistance level gives us an opportunity to at least, if for nothing at all, witness a sell, because this was kind of some trend line, okay? This was some kind of trend line around this area. And then this trade broke that trend line on the daily. So if for nothing at all, this trade will have to come back and test that trend line. It has to come back and test this trend line here. So on the daily, we are looking at this trend line coming back to test. Before, if this trade will go up, it will test the trend line and then finally make its way up. Do you understand? So we are watching this trend line being tested, and then If the need be for the trade to go back up, then it will hit or bounce on the trend line and make its way back up. So for now, we are waiting for this pullback here, and that is going to be our signal. So AUDCAD, we are going to sell AUDCAD. Now, when the market opens, we are going to sell AUDCAD at this current price. Let me mute my camera so that we can see the analysis very well. Okay. So when the market opens, we are going to sell AUDCAD at this price. The price is okay, 0. That's the entry price, 0.9375 This is going to be our entry price. Now, let me explain this thing again. I got a few people also asking me about this entry price. Now, when I give you entry price, I said we are going to sell when the market opens. I am not saying you should do a sell stop or a buy stop or a sell limit or a buy limit. That is not what I am saying. What I'm saying is that we are going to do instant execution or market execution when the market opens. If we are going to be doing a sell stop or buy stop or sell limit or buy limit, I will tell you. But if you don't hear me say that we are going to do a sell limit or buy limit or buy stop or sell stop, please, you should know that if I don't say any of those words, then it means that we are doing instant execution. It means we are going into the market immediately when the market opens. Please, are we clear? So you didn't hear me say a sell stop or buy limit or sell limit. So get that in mind. So once the market opens, we are going straight into the market to sell AUDCAD. We are going straight to sell AUDCAD. But this is the price at which the market closed. This is the price at which this market is currently at. So this is the closing price for the week. So when the market opens, we are going to sell AUDCAD. Now, AUDCAD, as I said, the price now is 0.93759. Now, as usual, we are doing a ratio of 1:1. Those who are following our signals already know why. Okay, I haven't said the why, but I'll surely say the why. But you already know that is our formula. You already know that is our formula. So 1:1 means we are targeting 100 pips TP and then 100 pips stop loss. So if our target is 100 pips take profit and 100 pips stop loss, what will be our take profit and what will be our stop loss? So with this price, our take profit is going to be 0.9279. So that is going to be our take profit, our TP. Our TP, we are selling AUDCAD. Our TP is going to be 0.92759. That is going to be our take profit. And our stop loss is going to be, so our stop loss is going to be 0.94759. So that is going to be our stop loss. Our stop loss is going to be 0.94759 as our stop loss. 0.94759. That is going to be our stop loss. And our take profit is going to be 0.92759. That is going to be our take profit for sell AUDCAD. So when the market opens, with all due respect, we are selling AUDCAD. We are selling AUDCAD. So please, let's sell AUDCAD when the market opens. Instant execution, or we are entering into the market immediately. Subscribe to our YouTube channel. We have more videos coming. The tutorial playlist is there, and then the signal playlist is also there. Make sure you go through our videos, and I'm sure you'll find something very interesting. Thank you, and I'll see you in our next video.